We understandably talk a lot about the high levels of inflation we've been experiencing for a long time now in countries like the UK, the United States, Canada, the EU, etc. But none of these countries come anywhere close to experiencing the highest levels of inflation ever known, which is known as hyperinflation. And many countries have experienced hyperinflation, such as China, Venezuela, and Greece, to name just three. But when it comes to the largest example of hyperinflation ever seen in the world, most people tend to think of Germany after World War I, but Weimar Germany is actually in fourth place. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. And let's jump straight in and take a look at the top 4 largest examples of hyperinflation in history. One of the first people to write about and coin the term hyperinflation was Philip Kagan, an economics professor at Columbia University, in 1956 in a paper called The Monetary Dynamics of Hyperinflation. And his key figure for identifying when you should use the term hyperinflation is when inflation hits 50% per month. And when many countries like the US, the UK, and the EU, for example, aim for an inflation rate of just 2%, you can see the marked difference here. Because hyperinflation is when there is a huge increase in inflation and prices that is basically unmanageable. And let's start off by looking at the 4th largest example of hyperinflation, which, as I've already mentioned, took place in Germany. And we're starting off by looking at World War I, which took place between 1914 and 1918, because all countries involved in the war went on bond sales drives to try to fund the war. And here is a poster from 1915 urging the British public to buy war bonds, for example. However, Germany wasn't allowed access to the international bond market during the war, so it was thrown back on its own resources, as was its allies, Austria-Hungary and Turkey. They were important financial centres, but weren't as large as London, Paris and New York. As a result, the sale of war bonds became more difficult for Germany, and they had to turn to their central bank, or Reichsbank, for short-term funding. With the central bank issuing treasury bills, the money supply was therefore increased. And pictured here is a 20-mark note that was issued by the Reichsbank. What this meant was that by the end of the war, roughly a third of the Reich's debt was unfunded. When defeated, Berlin found itself with huge debt. War bondholders were expecting victory and to be paid, while the Allied victors expected the Weimar Republic or German Reich to pay reparations for the war. The Treaty of Versailles imposed this on Germany in 1919, which we'll look at next. The Germans found themselves saddled with huge debt of 132 billion gold marks, which was the equivalent to more than 300% of the national income. This wasn't all immediately interest bearing, but interest payments accounted for more than a third of all Reich expenditure in 1921 and 1922. Germany was obviously therefore not attractive to foreign investors, and less foreign capital flowed into the country. And while the Versailles Treaty imposed huge debt on Germany, it could be argued that this wasn't the sole cause of the hyperinflation seen in Germany in 1923. Firstly, the tax system was ineffective, with higher income groups refusing to pay the taxes that were imposed on them. Secondly, public money was spent recklessly and excessively. For example, there were very generous wage settlements for public sector unions. This poor economic policy created enormous deficits for Germany, even before they were presented with their reparations bill from the Versailles Treaty. When looking at its currency, the strength of the Reichsmark fell over the course of the war. In 1914, £1 was worth 20 German marks, and in 1919, £1 was worth 250 German marks. So what did Germany do about this? Well, they then tried to depreciate their currency further in order to make German exports cheaper and more attractive. therefore forcing the Allied powers to essentially pay back some of the money Germany was paying them. The problem was that the US and the UK economies were in a post-war recession, which essentially negated the impact the Germans were looking for. When the Germans struggled to pay their reparations, France actually invaded the industrial Ruhr region of Germany between 1923 and 1925, which you can see pictured here. The German workers went on strike because of this, and they were supported by the German government, which led to more paper money being added into the supply. And this was unfortunately the end for Germany and led to hyperinflation. By the end of 1923, there were 49.7 sextillion marks in circulation. And you can see just how large that number is here. A loaf of bread cost 200 billion marks. Inflation reached 182 billion%. Workers were finding that there was no point in actually working because their hourly wage wasted away because prices rose faster by the end of the hour that they were working. Industrial production dropped to half of its 1913 level. And here is a photo of a German trillion mark note. And here are 100 trillion mark notes from 1924. Germany then wiped its internal debt, akin to a tax, which meant bondholders massively lost out and their wealth was essentially confiscated. And there was a book written about Germany's hyperinflation, as you can see here, called When Money Dies. And in third place of the largest examples of hyperinflation is Yugoslavia, because the split up of Yugoslavia in 1992 and the wars in Bosnia, Herzegovina and Croatia caused hyperinflation from 1992 to 1994 as trade collapsed and led to declining industrial production. The United Nations also imposed a trade embargo from 1992 to 1993, which obviously exacerbated the problem. So its government started printing money with its currency, the dinar, and inflating its money supply. By December 1993, its mint was issuing about 900,000 banknotes each month, which were almost worthless by the time they got to the people. And you can see here a 500 billion dinara banknote from 1993, because the highest monthly inflation hit 313 million%, with a daily inflation rate of 64.6%. So prices doubled every 34 hours. And this led to the collapse of the dinar in January 1994, with the German mark being adopted as the new legal tender. And in second place of the largest examples of hyperinflation in history is Zimbabwe, with its currency, the Zimbabwean dollar. Its financial system was in crisis a long time before it experienced hyperinflation that can be traced all the way back to its struggle for independence in the 1970s, with it finally gaining this in 1980. With large, unmanageable spending, protests against higher taxes, backlashes against its land reforms, redistribute land, poor agricultural production, meant the food supplies were low, monetary policy that attempted to ease inflation, but which was ultimately unsuccessful. This all essentially led to a run on its currency, led to huge import prices, and ultimately led to hyperinflation. By March 2007, Zimbabwe was experiencing a large hyperinflation. The highest monthly inflation rate was 79.6 billion%. Daily inflation rate was 98%, so prices doubled every 24.7 hours. A loaf of bread cost 35 million Zimbabwe dollars, and you can see here amazingly a 100 trillion Zimbabwe dollar note. But in the end, the Zimbabwe government had to replace its own currency with foreign currencies such as the South African rand and the US dollar. And finally, in first place with the highest recorded hyperinflation in history is Hungary. And we need to go back to after the Second World War, because Hungary had to pay reparations to the Soviet army following its loss. So Hungary's economy was in an awful state after the Second World War, with half of its industrial capacity and a lot of its buildings and infrastructure completely destroyed. And this led to huge hyperinflation, with the highest monthly inflation rate being 41.9 quadrillion%. The daily inflation rate was 207%. The largest banknote in existence was 100 quintillion that you can see here. And in August 1946, Hungary created a new currency called the forint, which is still its currency today. So that ends this video looking at the largest examples of hyperinflation in history. But as always, I'd love to know what you think in the comments below. And if you're interested in more of a tailored approach to your crypto education and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.